Hello traders and welcome to another video review. Today is Friday, January 28th, 2022. Let's take a look at the Forex calendar in the last day of trading week. Some data had been published overnight already. Mostly those data are from Japan, but none of them is really a market mover because the main event of this week was, of course, the FOMC interest rate decision made on Wednesday afternoon. So right now, all of this data that have only one dot here on the scale of importance are not really market movers unless they are very different than expectations. So far it looks kind of well. We got set of the economic data. As you can see, for example, the GDP from France published at 7:30 for the fourth quarter is drastically lower. 3.1% quarter to quarter was the last reading. This reading is 0.7%, which is slightly better than 0.5% expectations, but still on the quarterly scale, including the Christmas period, 0.7% for the GDP is apparently not that great at all. The consumer spending from 0.9% it decreased to 0.2% in December in France as well. Moreover, we are still waiting for KOF economic barometer from Switzerland, scheduled for release 9 a.m. sharp. Market participants expect the decrease from 107 to 106 points. GDP, another GDP from Spain, this time scheduled for release 9 o'clock. For fourth quarter, GDP reading is expected to drop from 2.6% to 1.4%. So again, another drop. The most important data during the London session are data from Germany, GDP as well, which is even worse in expectations than both from the Spain and France. For example, for the fourth quarter, GDP is expected to drop from 1.7% to minus 0.3%, which is really bad. Even if this is only fourth quarter, including of course the Christmas period and you know New Year's Eve and stuff like this, so that's not good at all. That's not good at all. Unemployment rate and unemployment change data scheduled for release 5 to 10 from Germany. As you can see, unemployment rate is right now at 5.2%. During the New York session, we got the PCE core and personal spending data from the US scheduled for release 2:30, and then we got the personal income and employment cost index. At the end of the day, at 4 o'clock, we have a scheduled for release University of Michigan inflation expectations. Right now it's 4.9%. Very optimistically, and Barker Hughes US rig count for all of you oil traders is scheduled for release at 7 p.m. Then this is the last data for Friday. So this is how it looks in today's economic calendar. However, I guess the markets will still be continuing the moves after the digestion of the FOMC data. So virtually in the larger perspective, none of this data is really a key market mover, and I guess that the market participants will still hold on to their view after the FOMC meeting. But let's take a look what is going on the US dollar. The US dollar, as you can see, is getting towards higher highs. The new swing high was made at the level of 97.33, and the bulls are heading towards 61% of the Fibonacci extension. So this is our target, 97.70, and just above it is 97.77, the old technical resistance. Right now, the level of 96.61 is technical support, and the other level of 96.92, the old swing high, is now technical support. There is one more thing we can do here with this chart, is to move the upper channel line a little bit higher. If we move it here towards the last high, because we got the last high above this high, so we can now move our channel towards the recent high, and as you can see, this is even somewhere, the upper channel line is even somewhere higher than the target, so we might have some kind of a blow of top here on the US dollar index. However, it looks very, very bullish, and it's very much supported by the momentum. Momentum is very strong right now, 68 points, pointing straight up after like 3 weeks of the decline correction. So anyone who stays on the road of a US dollar bull will be just smashed until the target levels is hit. 97.70 and the next is 99.10 on the US dollar index. Let's take a look what is going on with the US dollar to the Japanese yen then. US dollar to Japanese yen chart on the daily time frame chart. The daily time frame chart looks very, very similar to the previous one. As you can see, we bounced from the level of 113.50, and right now we are just getting through the last technical resistance before the swing high from the beginning of the 2022. 115.53 has been violated. Target is 116.37. Momentum supports the up move, pointing straight up. Right now the level is 62 points, a very strong momentum, genuine move higher on the US dollar to Japanese yen. Please pay attention to this high here, 116.37. Let's take a look then what's going on the US dollar to the Canadian dollar. The same situation like everywhere. US dollar to the Canadian dollar is moving higher. Let's just zoom in. As you can see, we retraced almost 61% of the last wave down. So right now these levels are no longer necessary, 50 and 38%. There you go. 61% is 1.2768. I guess this will be hit soon enough. Eventually the next technical resistance is located at this one is kind of old. We should move this technical resistance a little bit higher towards 1.2852. And let me just copy one more level for you guys. This is the next technical resistance around 1.2896. When this level is hit, as you can see, I got my blue arrow, of course, here. Let me just move it towards the high here. This is the next target for bulls. 1.2962 is the swing high from the end of the December. This is 20th of the December 2021. If this one is violated, then the bullish movement will continue. The immediate technical support 1.2647, 1.2609. Bulls are in charge of this market. And last but not least, let's take a look at the US dollar to Swiss franc. Very, very similar chart to the charts we already looked at, and as you can see, we have a somehow different situation here, because that move here is definitely corrective. We can even delete our channel here because it doesn't actually means anything right now. We have, of course, the ABC move to the upside. I'm trying to count this this internal correction, but it looks straight on ABC, 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 three wave moves only, which means this is a complex correction, so it doesn't matter right now how do we label it. It's very, very complex. So unless we break above one of the key technical resistances, like the one that the arrow is pointing at, which is this is exactly 9,375, then the target is 9,475, so that's a 100 pip higher, and then we can say that the up move is being continued. Before this will happen, I guess that the market might have some trouble with this zone here, when my blue arrow is, of course, and if this zone is violated, clearly violated, we can extend the move higher towards 9,475. As you can see, we got some kind of a false breakout below this short-term trend line here. However, we didn't break below 9,084 dollars. This is pips. Sorry, this is of course the immediate technical support for this market right now. Very nice zone. 9,084, 9,094 pips. This is the supply zone. Even if we extend our upper channel line, we can see that something like this is being built. So that's a still corrective movement, and no one is winning in that situation. Temporary control has shift to the bullish camp, of course, but they still have two very important levels to break through in order to keep the control of the market. Let's take a look at the SP 500 to see what is going on at the end of the week, and the situation doesn't look that much bullish. Why? Because as you can see, the market participants made this very nice pin bar, kind of a hammerish candle. Then before the FOMC and indecision candle, a little bit up, a little bit down, we close in the very same planes. During the FOMC, they tried to rally, but they were forced to move lower. And yesterday, we tried to rally again, but we made a lower high, and then we got an inside bar here with the with the up body, green body. But this doesn't mean we are getting somewhere. At least not this week. However, there is still Friday candle to keep an eye on, and this Friday candle is being built into extremely oversold conditions, 21 points. Extremely oversold conditions. If the market is not trending down, and as you can see, for years the market has been trending up, okay, the extremely oversold conditions means that the market participants want to accumulate the index and then push it higher. So as long as we are not trending down right now, we cannot say if we are trending down right now or not. There is a chance that the Friday might have a nice green candle. If we have nice green candle that will close above FOMC Wednesday high at the level of 4,453, then this might be treated as the reversal from the extremely oversold conditions, targeting 4,488, 4,551 and 4,598 next week. So that's the situation of S&P 500. Of course, if none of this condition is met, then we will see another down wave towards the level of 4,233 and even lower towards the ultimate technical support at the level of 4,000 and 4,020. And last but not least, let's take a look at Bitcoin. Our Bitcoin scenario is still intact. We are waiting for the Bitcoin to complete the down move here towards $30,000 and then bounce back up towards the red zone indicated by this blue arrow. As you can see, we are not going very bullishly, very dynamically, very strongly higher. The recent high, this is the FOMC Wednesday high, 38,845 has not been violated yet, and of course the first target for bulls, 39,540, has not been hit yet as well. So this is still the kind of a scenario that might need some time to develop. The market is bouncing from the extremely oversold conditions, 20 points, just as it is right now on the S&P 500. However, the volatility is not that great anymore. So the market participants do not see this price levels as oversold yet. Okay, only the indicator shows us that those are the oversold conditions, so we have to wait for the target for the price levels that will be seen very quickly as very cheap Bitcoin, and that might be the reason why the most of the market participants will accumulate Bitcoin and push it higher through the technical resistance. So we need to wait for the further development on Bitcoin for now. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next week. So take care and bye bye.